Now real estate prices are sliding again. Is this the bottom, or should buyers and sellers be bracing for another drop? Today in this video, I'm going to go over August's numbers compared to last year and see where we are in terms of the market. By the end of this video, you have a clear picture if this is the bottom or if there's more pain ahead. So let's start with some numbers for August. There are just about 5,200 homes for sale in the GTA. That's about a 2.3 increase from a year ago. Yes, the number is a little bit higher, but it's not a dramatic surge from where it can be. It shows that buyers are coming back, but the market's a little bit shaky. The average sale price is just slightly over $1 million, which is about a 5.2% decrease from a year ago. So in other words, there's the decline as a whole in the market in terms of pricing. It's not just condos, detached homes, semis, townhouses. On the supply side, sellers are listing more, where we have an increase about 9% increase in sales. No, the number of listings, we have an increase about 9%. What this means to sellers is that it pushes them to negotiate with buyers. So here's the tension. Prices are down. Sales are about the same. And supply, well, that's climbing. Well, that's a recipe for if you're a buyer, there's choices and prices are coming down. So is it stabilizing? Is the market stabilizing? Or are we in for some more pain? And this is exactly what we're going to talk about today. So even though prices are lower than a year ago, rates are still high compared to the low point where they were a few years ago. If you're looking in the 905 area code, detached homes in those areas are taking a big hit in terms of pricing. Depending on which neighborhood you're in, we're seeing about 6 to 10% decrease in prices in those areas. When we had big price gains, these neighborhoods saw the biggest price appreciation. And because of that, they also have the biggest depreciation. And because of that, they also take the biggest correction. The other thing that you're hearing in the headlines are condos. Well, those are about 10% down in prices, which it's a little bit painful if you're looking to sell right now. There's also psychology at play. Buyers are waiting for more price cuts. Buyers are waiting for more rate cuts before jumping in the market. Some are preparing right now and just sort of window shopping and seeing if there are deals, or just waiting and prepping for when there's more rate cuts. The thought process for buyers is that why buy a condo right now or even a house when there are expected rate drops coming up in the future where they will pay less interest on their mortgage. And because of this mindset, it's freezing demand and sales. Because even though you run the numbers, affordability has been better in the last few months. So meanwhile, all these other things are happening. Sellers are facing more and more competition. Active listings are sitting about 27,000 compared to about 22,000 a year ago. So you have more supply, amount of demand, causing lots more negotiations to be happening on properties, which is pushing down the prices. So let's zoom out a little bit and compare what was happening during the summer, not just a year ago. We're talking about a couple months ago. Back in June, the average price of a home was about 1.1 mil. Fast forward to August, we're down to $1,022,000. That's about an $80,000 drop in 2 months. And because of this, it shows that the market hasn't stabilized yet. We're still in a downward slide, not drop. But here's the other interesting thing to look at. What has happened in July compared to August? When you look at it on a month-to-month basis, seasonally adjusted, prices in August are pretty much similar to what they were in July. That's a first sign that we might be bottoming out, maybe. Here's the other thing. Sales are slightly up year over year. And Toronto's job market is a little bit resilient right now, even though you see what you hear in the papers. Inflation is sitting about 2.3% right now. That opens for Bank of Canada to do some rate dropping because we're sitting around their projected inflationary rate. So on the downside, if Bank of Canada holds their rate for too long, it's not going to give buyers enough confidence to enter the market. Add in tariffs, economic uncertainty, and you'll get more hesitation. And let's not forget, supply is increasing quicker than demand. And because of that imbalance, it could push prices lower than where they are right now. On the upside, if we see, let's say, 1 to 2 or even 3 more rate cuts this fall, where one just happened already, we just dropped 25 basis points, and we see immigration growth. Both of these will keep long-term demand in Toronto. And then we can see a floor form very quickly if that happens. Looking at TRREB news, you also see that they're alluding to housing development, infrastructure updates like for transit, and all these will add to economic stability over the next few years. So have we hit bottom? My answer is almost, as August has a flat month compared to July. It shows that the majority of bleeding might be over. But when you compare numbers year over year, we're still in a decline. And what this tell me, it's not going to be a V-shape recovery. It's more going to be, might be a slow grind sideways before prices start inching up again. But here's the thing. The true bottom might be forming right now, just under our nose. You might not even know it yet. If you're a buyer, this is your opportunity. You have lots of listings to choose from. And sellers are open for negotiations. Prices are lower than a year ago, and rates are lower too. Once rates start dropping even more than they have been right now, competition is going to increase. It's going to pull a bunch of more buyers into the market. You might think you have all the time in the world, but Toronto have historically been in a majority of a seller market. This is a buying opportunity that don't last long. I can guarantee, as we're in Toronto, competition is going to be back again. So acting now is going to save you not just money, but a lot of stress. Buying in a multiple offer situation is not fun. I've been through thousands of these. But if you're a seller, patience and proper pricing strategy is your weapon. Homes are definitely sitting a lot longer because some sellers don't want to believe where the market is right now. Average days on market is sitting about 49 days, almost 2 months. Almost 2 months on the market. Because if you price too aggressively from the get-go, you can end up cutting anyways to get to the price that your home is really worth. If you price sharp, price correctly, you'll stand out in this market and be done with and sold in due time. And historically, when homes are priced proper from the get-go, they do sell for a higher amount than ones that have been on the market for 3, 4, 5 months. Toronto real estate prices are in a tug of war. Prices want to drop further because of the oversupply and weak demand. But affordability improvements and potential rate cuts could flip that momentum just like that. Timing is everything. I don't see the bottom as being a dramatic crash. It's going to be a slow and grinding transition. Here's the question. Are you going to wait for this bounce back in terms of the market? Are you going to get ahead of the curve and take advantage of this buying opportunity right now? If you like this video, give me a like and subscribe for future educational videos just like this one.